We have Twitter, we have social media.
Resources at their disposal that affect that transition.
Well, I was going to ask you about that because
Three, but so is alpha dead?
Absolutely not. It's a great layout for what has happened, but I think one other added component are ETFs. And ETFs dominate a lot of the flows in the markets, which are generally just based on passive indices. And the more you have that as a big player in the marketplace, actually the easier alpha gets. So you have a situation where there's so much information flow that your short-term factors are diminished, but it doesn't at all change the long-term dynamics. And so if you have the ability to invest in research, if you have the ability to have on-the-ground insights from around the world, even if you're just focusing on one portion of one market in one pocket of the world, you have the insights that allow you to pick good companies with good governance for good long periods of time. And alpha becomes, if not the same as it was many years ago, maybe even better.
Do you have a sense that you need more research, you need more technology? Has it gotten harder?
It's become different, right? The factors are different. So when you used to be able to look at a company, and if you spend a lot of time there, you might have more information than other people. Information is too fluid for anyone to have a short-term advantage over that. So you really do have to have a tremendous investment in research analysts all around the world, not just on your company, but on your industry, and then on the things that affect the industry of the company that you want to invest in. So that's as a starter. Of course, you then also need technology to be able to trade and get liquidity when you need it, be able to take the right size positions, how to take those positions, when to take those positions off. That becomes a very big factor in also providing the alpha. So trading ever more so has become a portion of the alpha that's an important component of how we manage portfolios. And then the macro environment, right, is ever increasing. The interconnectedness of the world is so important that you can't just think about your stock in a particular area. You really need to understand all of the global impact, which requires on-the-ground research everywhere that you can get it to be able to provide you those insights and then to provide that long-term alpha.
So tell me about your process, your investment philosophy, how you guys actually do it.
So at JP Morgan, our philosophy is that we provide an infrastructure of risk management, technology, legal compliance, the huge power of the force of the 1.4 trillion in assets under management that we have to be able to face off to the market. But on top of that massive, important infrastructure are a series of little boutiques. Nobody wants to tell an individual portfolio manager what to do, because then we would have groupthink across the place. So we allow our portfolio managers to make their individual decisions based on the research analysts that they want to listen to, partake in. They are allowed to go long or short the stocks or the bonds that they are pertinent for their feel that they're pertinent for their portfolios, and that's become the magic of JP Morgan Asset Management and the reason for the tremendous amount of inflows that we've seen over the past several years.
But your process hasn't necessarily changed because alpha has gotten harder. It's just kind of evolved.
No, as a matter of fact, you know, one of our longest standing records is our large cap portfolio, and our large cap portfolio has provided 175 basis points of alpha, compounded average annual growth rate over 25 years.
And that's an incredibly efficient asset class, right?
Exactly. So we don't want to change anything that they do.